Welcome back to the channel, everybody. My name is Artie with CoinCasso, and in this episode, we go over the top news articles written in the last 24 hours so that you guys can stay up to date and informed on everything going around in the cryptocurrency space. We've seen a nice steady Bitcoin since the halving, trading at about 8,900 to 9,100, and now it's jumped up to the $9,300 threshold. Let's jump into the news and find out why. And our first article is titled, "Some Miners Face an Uncertain Future Despite Rising Bitcoin Price." Despite a post-halving rise in Bitcoin price Wednesday, the current value may not be enough to keep less efficient miners operating, and that could shift the market dynamics. At press time, Bitcoin was trading up 2.3% over the last 24 hours at $9,100. The world's first cryptocurrency is trading above its 10 and 50-day moving averages, which is a bullish technical indicator, and has been on a steady uptrend since early trading May 13th. The long-anticipated halving was a little uneventful, but market uncertainty lingers when it comes to cryptocurrency miners. The reward for miners to generate new bitcoins was cut because of the halving to 6.25 bitcoins, so the business of running machines to secure the network is much less profitable. I think some miners are in trouble. They just took a 50% pay cut overnight, with prices remaining where they are. One mining metric that immediately changed after the halving was miner revenue from fees, which jumped from 4.6% right before the halving to 7%. Miners bowing out of the business may change the dynamics of the crypto market. The difference is that miners' new net tokens are now not necessarily the primary driving force of sell pressure in the markets. That mantle is likely to be taken on by the exchanges that make trading fees and have to sell into the market to cover their business expenses. When it comes to miners and how much they make, you need to be super efficient when it comes to energy consumption. Going to energies like solar and wind are going to make you more profitable. The initial setup is more expensive though. There's like 10 factors that go into how much these miners make and how much computing power they need, because sometimes the hash rate to solve these blocks gets changed. I'm curious to see what percentage of the whole miner population actually gets cut out after this halving. And onto our next article of the day, which is titled, "Many Ether Whales Might Be Leaving for Bitcoin." While Ether's price has risen by nearly 50% this year, the number of addresses holding large amounts of the currency, popularly known as whales, has declined significantly. The 7-day average of the number of unique addresses holding 10,000 ethers or more fell to 1,050 on Tuesday. That's the lowest level since January 2019. The whale addresses are down nearly 6% from the December high of 1,115. The metric represents externally owned accounts, or the ones controlled by private keys, and excludes contract accounts that have their own code and are controlled by the code. The decline in the number of whale addresses is in contrast to the recent rise in the number of Bitcoin whale addresses. The 7-day moving average of the number of addresses holding 10,000 Bitcoins or more rose to 111 at the end of April, the highest since August 2019. Some Ether whales could have moved to Bitcoin in anticipation of potential price appreciation in the top cryptocurrency due to effects of the mining reward halving. Now, this is super interesting that a lot of these people that hold a lot of Ether are switching over to Bitcoin because Ether 2.0 is coming out at the end of July. People have been anticipating the price of Ether to skyrocket up once that 2.0 version comes out. I guess these whales know something that we don't. And onto our last article of the day, which is titled, "Bitcoin Steady Near 9,000 as Trump Touts Gift of Negative Interest Rates." Bitcoin has ended a 4-day losing trend and it's trading steady around 9,000 amid rising speculation the US could eventually adopt negative interest rates. The top cryptocurrency by market value rose 3% on Tuesday, having suffered losses in the preceding 4 days, the longest daily losing run in over 2 months. Tuesday's price coincidence with the US President Donald Trump's renewal call for the negative interest rates. As long as other countries have been receiving the benefits of negative interest rates, the US should also accept the gift. Under a negative interest rate policy, banks are required to pay interest rates for parking spare cash with central banks. Essentially, commercial banks are penalized for holding excess cash in a bid to force them to boost lending to businesses and consumers. However, countries such as Japan, which are running the negative interest rate policy since 2016, have still not seen a sustainable uptick in growth rate and remain far from their inflationary target. Basically, when Trump announced this, the price of Bitcoin jumped from 9,000 to 9,300. So I think that this is the reason why we saw that nice spike up. And like I said in my previous video, if we can hold that $9,300 mark for the next 24 to 48 hours, we should see some steady growth below 10,000, and it should stay in the high 9,000s over the next week or so. Again, I'm not a financial advisor. This is just my opinion and speculation, so make your own investments at your own risk. And that's it for the news, guys. Don't forget to like the Facebook page, subscribe to this YouTube channel. Join us again tomorrow when we go over the top cryptocurrency prices and the news. Thanks for watching, and we'll see you tomorrow.